Okay, so I would like to hand over to Laurent and Jan to quickly introduce yourselves to the audience as well.
Great. Hi, everyone. I'll start here. So yes, my name is Laurent. I'm Swiss. I've built my careers in investments and private markets specifically. So I'm passionate about venture capital, private equity investing, and in particular in the healthcare and medtech life sciences space. So I had a chance to build up a thematic investment team at Swiss Re Asset Management, where we did invest into these verticals, and we're also leveraging Swiss Re's broad insights and data from its insurance business, obviously in that space. And then I moved over to Kiger, where we are investing capital on behalf of a wealthy German family, also in the healthcare that emerged from the healthcare space. And so the focus is really global investments into healthcare. And again, health tech is a big focus for us, and Europe in particular. So really keen in discussing this today. And again, very passionate about that, and a big believer in healthcare investing going forward, and what this can do, and how smart capital can really accelerate the transformation in that industry that is critically needed.
Thank you, Laurent. Jan, you're still on mute. Great.
I mean, we've been doing this for so many years and I haven't learned it yet. So my name is Jan Fulcher. So my passion is innovation and entrepreneurship is so how to get from ideas to a running company that is actually successful. I've been doing this, as mentioned, in the last 25 years as a co-founder investor, but then I switched to the ecosystem side and ran an angel club out of that. Developed SIGTIC and co-founded that later with a few people, and recently MEDKAP, which is based on the hypothesis that an angel club, an efficient angel club, focuses on a thesis, and our thesis is health tech. Because it does make sense that, and we'll talk about this later, it does make sense that an angel investor invests in industries they don't understand. That's usually not a good idea. Besides that, I'm in a Swiss coach. I work with around 30 high-tech companies, usually spin-offs. I do some lecturing about financials, financial planning, fundraising, and I worked a few years in management consulting for the financial services industry.
Great. Thank you, Jan. Maybe just to add a few more words about me. So I've co-founded MEDKAP together with Jan. We are also working together at Capsley, where we are consulting health tech startups, especially focus on the commercialization aspects of building their and launching their businesses. And we're also consulting corporates who want to benefit from health tech innovation. Besides these two heads, I'm also managing director of the HealthTech Park, which is a physical cluster for medtech and diagnostic companies in Zurich. All right, then I will come to the first part of our agenda, why investing in health tech is attractive overall. We believe overall it's relatively future-proof or also crisis-proof, and also has an impact aspect, of course, which is also often interesting for family offices or private investors to also do something good, actually. The interesting thing is that the market size continues to grow. If you look at medtech companies that have a very broad portfolio, no matter what crisis is coming, they're somehow always growing by 6 to 8% every year, which is interesting due to the breadth of the product portfolio they have. And I work in medtech since 2011 and believe right now is a super interesting time if we look at the different technologies that we have and how they are disrupting the industry and the pace at which this is happening. We all know that digitization has already started 10, 15 years ago in healthcare. Everyone was talking about it. But every year it was sort of the same challenges that were mentioned and not really much change happened. I believe now in the last 2, 3, 4 years, we really see the impact and a lot of change, for example, through telemedicine, that a lot more people get access to care or through AI and diagnostics and automation, which really improves the costs and efficiency, but also genomics and precision medicine that enables personalized treatments in cancer, etc. So I think this is really exciting times. There are a lot of interesting startups and spin-offs from the university environment that deserve funding, that deserve to be successful. So it's definitely a market where one can create good returns, because it's also quite a high margin area, profitable industry, while also creating meaningful impact to the society and to advance healthcare. In Switzerland, I believe we are very well positioned in healthcare. We have a lot of hidden champions, but we also have large players in the diagnostics and medtech space, and we also have very strong universities. However, if we looked at Switzerland and if we looked at the CAPSLE funding reports that we have now published 3 times, we always noticed that there wasn't so much activity in the pre-seed phase. I mean, on the one hand, those really deep tech spin-offs, let's say from ETH or EPFL, they can bridge this gap a lot through grants, etc., that they are receiving. But what was noticeable is that even though we have such a strong economy and or industry in the healthcare space, there was not much private investments going into early stage health tech startups. So this was basically also the motivation for us then to create MEDKAP, to create a dedicated investment club with healthcare professionals that is focusing on this vertical, as Jan has already mentioned. So this is just to give you a brief introduction, also to understand why we have actually launched MEDKAP. All right, now I would like to hand over to Jan and Laurent to present some of their key findings from the latest article they have published.
Right, thank you. So Vincent has asked us to have a look at what's going on in the world and how this impacts our landscape, the Swiss landscape, and also MEDKAP. That is actually quite interesting. So few findings there, and I'm sure you're all aware of that. The United States, that was the leader, is losing attractiveness quite quickly. So there is a massive reduction of R&D funding. We are already thousands of jobs are lost. Researchers are leaving or thinking about leaving. So I read something that around 80% of the researchers are considering leaving the country to Canada. Some want to go to Mexico, and many want to go to Europe. In Europe, there was a new program set up, Choose Europe for Science, a 500 million euro package that should make it attractive for researchers to go to Europe. Of course, Switzerland is not part of that, since we don't want to be part of anything. However, Switzerland has a huge advantage that it's a very, very attractive country to live, and it has an extremely interesting research and development environment. So one part of that is the life science clusters in Zurich, where also Vincent is part of that, Basel and Lausanne, but there is also strong ecosystem, mainly supported by InnoSwiss and related programs, where we have a lot of non-dilutive funding supporting research and development. Patent side is interesting. Even though we are not part of the European Union, we can file these unitary patents. So it's easier to file patents that cover the whole of Europe. So that makes life a bit more agreeable, and can help, again, researchers to relocate to this country. So what does it mean for us as angels? We believe that it will, in the medium term, deal quality will significantly improve, since we're going to have a lot of research and a lot of talent coming from the United States. And we, of course, we hope that it improves, even though we don't have an active program to attract these talents. Also, I think On the regulatory and IP side, things are a bit easier than they used to be, since we can start with the local laws with MEDIC and patents here, but can expand quickly to the European scale. So it is easier to expand, get out of the country and expand to Europe. So we believe it's an extremely interesting time to become engaged as an investor in the health tech space, because there is a lot going on, there will be a lot going on.
Thank you, Jan. Handing over to Laurent to speak about your perspective, rather from a PE and investor or professional investor perspective.
Yeah, perfect. So taking a step back, I think the venture capital and private equity industry, and this always goes hands in hand with the merger and development, right, globally. So that has had 3 years of some challenges. So in particular, funds have really struggled to sell their investments. The IPO market has been very slow, if not dead. And as I said, M&A activity has been extremely slow. So they have been sitting on some investments. Investor confidence has been lost a little bit, also due to the returns, obviously, then having lagged public markets. So that was a headwind. And then you add what Jan said, right? What's happening in the US, this policy uncertainty, questions around R&D, but then in healthcare specifically, also the Food and Drug Administration and the pace of approvals there with a new head coming in, and the overall stance also on healthcare and innovation in healthcare, all that uncertainty. And then you add the public reimbursement dynamic with Medicaid, Medicare. This has created some headwinds also for healthcare investors, which have historically, if you look at private equity and venture capital, then I would say 70% of all activity has been in the US. Now, clearly, if we look at this year, then I would say there are some signs of hope. So activity has actually increased and improved a little bit. In Q1 specifically, we saw 25 billion of private equity venture capital transactions, and in Q2 actually the momentum continued, surprisingly, especially in Europe. And then two sectors really, or sub-industries I should say, stand out, and these are life sciences and health tech. So health tech recorded a 27 billion deal activity in the first half of this year. That compares to 37 last year, so it's clearly on track to outpace last year. And then also in life sciences, 7 billion, which already has surpassed the levels of last year. So we see that momentum, especially in Europe, which is a positive sign, obviously. And investors know that in healthcare and also health tech specifically, the returns are highly attractive. If you look at the historical returns patterns over the 5, 10, or 15-year periods, then of course you always have IT being the leader, but you always have as a second and sometimes the first being healthcare investments that have shown the strongest performance amongst all sectors, and also if you adjust it for the risks, obviously. Now, as an investor, I think it's one of the most complex industries, clearly, and also to Jan's point, I think you really have to understand the industry, the regulatory dynamics around it. But if you can do that, then outperformance is really the potential there. And so Switzerland specifically, has also, if we track the transactions over the last decades that have happened in Switzerland, both in venture capital and private equity, then these deals have outperformed the US and most of Europe as well. So that means Switzerland is not only offering an innovation-friendly ecosystem, and even though deal activity has been very small, right, compared to the rest, the deals that have happened were of very high quality and also high performance. And I would say with the opportunity now to also building on what Jan said, to build out that hub here locally, offering a very stable policy environment, which is absolutely essential for a health tech investor, plus combining this with a strong science and innovation and R&D spending, this really offers that potential to step up here. I think looking at how Europe broadly lost a bit its importance in terms of large companies, right? So no European company is really among the world's 10 most valuable, which is a disappointment, because if you go back in time, at the moment, to give you a few numbers, 18 out of the top 100 are in Europe. At the beginning of the 21st century, we had 41 companies being among the top 100 globally. And Switzerland has a few blue chips, right? Like Roche and Novartis in healthcare, but also the list here, or we also, moved back in terms of ranking. So I think that opportunity to really lead scale-ups and build globally important companies in healthcare that make a big difference, not only for the health system in Switzerland, but also globally, that should improve and should be a key focus. And what do you need for that? Well, it really starts at the very beginning. It starts with a seed capital. It starts with a developed environment for angel investing, for venture capital, and then obviously also attracting private equity, which can, in some cases, really, not always, but in some cases, really help scaling businesses that either improve patient outcomes or help reduce the costs and take out costs of the system. And so we see the interest from that industry growing. So there are more and more funds also focusing on Switzerland now with a health tech focus. We see some actually shifting a little bit away from elsewhere to the DACH region. And within the DACH region, obviously, Switzerland is attractive at the moment. So we increasingly see that. So there are these positive signs. And also some GPs really say that digital health has become really a strategic imperative, right? Because it offers very cash efficient growth and also increasingly buyer interest. And so what we need is now attracting that smart capital, combine it with a conducive policy environment and innovative environment in Switzerland. And then I'm very positive that we can move into that direction and also reflect that in the large wealth portfolios going forward. So I'll stop here, but obviously happy to take any questions then.
Great. Thank you, Laurent. Yes, I already saw there are some questions in the chat. We will have time at the end to go deeper into questions and have an open discussion. So I would wait a little bit for this. But maybe one final question to you, Laurent. I mean, we saw on the one hand, there are a lot of opportunities that Jan has presented that make early stage investing into health tech now very attractive. Looking into like the midterm future, like 3 to 5 years, I mean, as investors, we need exits, right, to make things profitable. Do you think the environment for exits in, let's say, 3 to 5 years is going to improve and be attractive as well?
Yeah, I think exits are a bit cyclical, right? And as mentioned, we do have headwinds. But now again, in the first half of the year, we saw quite a few exits with Anthos Therapeutics or Synton International. So we saw a few companies in Europe also tapping public markets or assets being sold to other private equity firms. So we see definitely tentative signs that this is now improving. And clearly, as soon as also the policy uncertainty is reducing, then that window is opening up again. So I'm confident that this works. And putting that aside, for a healthy, solid asset, you can always find a buyer. That has always been the case. It's just the case that you had a bigger bifurcation between the assets that are maybe not as strongly cash generating, not as strongly growing, versus the ones that have a strong IP, a strong positioning there. I think you can always find a good exit opportunity. Okay,
great. Thanks for providing some confidence there. Obviously, nobody has a glass ball and knows exactly what happens. Okay, thank you for sharing your insights on this and for providing this article and putting this together. Now I'll hand back over to Jan to share some insights on investment strategies and what business angels should consider here.
Thank you. So when I ran Business Angel Switzerland, and I did actually quite a bit of studying why do people do what they do and how are they successful. And one thing I learned from that exercise is that's really interesting. Those angels that outperformed the club and were highly successful were angels that understood the industry very well and actively engaged with the startups. So one learning I made during those years was that it's not that the company is successful and you as an angel profit from that, but you as an angel, you actually help the company be successful because you understand the industry, you have the networks, you know the suppliers, you know the customers, you can do the intros and so on. And that's actually a significant factor in the success. I don't have data, hard data there, but would assume that if you understand the industry and can help your startup, the likelihood of the company being successful is, well, 5 times or 10 times higher. So it's really, really significant. And I'm unfortunately can't tell the names, but some of our board members at BAS that were highly successful would support that. So what makes angel investing interesting? In that case, angel investing needs to happen within an industry because otherwise you don't know what you're actually investing in. And then it's basically it's lottery or, going to the casino. And what we know from research is that angels have a combination of 2 interests. Having fun. Having fun means feeling the dynamics, feeling the energy, doing something useful, helping economy grow, helping the company grow. But on the other hand, of course, also make money with the company. And what we do with MEDKAP is a strategy that allows you to have both. So, how to make money with startups, and you might know that the returns on an angel investment are very, very asymmetric. A very small number of the cases will generate a very high return. It's measured in the multiple being how much more do you can make for every dollar you invest or every euro you invest. And so a 10 time, a multiple of 10 will mean 10 euros out for 1 euro in. And usually a very small number of cases will generate a very high return. Usually around 10% will be responsible for the overall return of your portfolio. And that means, of course, if you have a very small number of cases that generate a very high return, you need a large number of investments. If you have 3 investments, if you do 3 investments, the probability that you have a very high return is relatively small. And very many angels leave the game after they've done 2 or 3 investments because they didn't generate the returns yet, but the losses, and they feel that this doesn't work out. And no, it doesn't work out if you stop after 3 investments. So you really need to do your 10 or 20 or 30 investments if you want to make money with that. And of course, what do you need to do? You need to do many investments, and what you also need to do is increase the probability that each of the investments can be highly successful, right? Because it's A, the number of investments, and B, the success of each of the companies. And we try to combine that. Now, the other part, how do you have fun with startups? I had times where I was engaged actively in 5 or 6 companies at the same time, and that didn't work, right? Because it's just too much. So my learning is that an active engagement in companies should be in 2, at most 3 companies at the same time. Otherwise, it will be impossible to do this in an active and interesting and fun way. In addition, I strongly recommend that you become active in an industry that you know, where you have a network, where you can do the intros, where you can really, really help the startup. Okay. Now, what you can do and what makes the company successful is that if you help them being successful, so find customers, find pilot customers, later regular customers as quickly as possible, and help the startups avoid doing stuff which is not relevant. Relevant is finding customers, delivering a great product for these customers, which we have. Create synergies, be close to the company, but don't have an operational role. That's a big mistake. Have a strategic role, but not an operational role, because if you're in an operational role, it suddenly becomes very complicated. Who's your boss? Because you gave the money, but the CEO is your boss. That's difficult. So advisory role is great. And what you also can do and should do is try to avoid future investment rounds, right? If we can avoid a VC round, then our dilution will be smaller, meaning we'll get more of the exit. And of course, it's totally legitimate that you make some money with the company if they earn money. So if you help them find a paying customer, taking a cut there is totally okay. And of course, it generates a bit of fun. So in combination, what could be a good investment strategy, what we suggest and promote with MEDKAP is that you do a large number of investments, 10, 20, 30, but with small tickets, because we don't have endless pockets, obviously. So we can't invest endless amounts of money, like 50,000 for 20 cases would be $1 million. We would suggest, of course, you're more than welcome to do this, but we would rather suggest smaller tickets and a larger number of cases, and keep a bit of money on the side if there are additional rounds to avoid dilution. And on the other hand, invest more money in a few startups that you manage actively, where you have an active role, where you help them actively, with the goal of reducing capital need, avoiding further funding rounds, and helping them become profitable as quickly as possible. Of course, you need to think about the exit strategy. Startups rarely do this, but it's really important to have an exit strategy in mind very early and steer toward that. And of course, you're totally allowed to charge certain success fees if you help them being successful. So assume you would have a 200K in budget, which you want to use for startup investments. What you could do would be 2 active investments of 30K. These are still relatively small tickets for angels, and the 200K budget is not a huge budget, right? So 2 active investments, 30K, where you have an active role, and then 14 passive investments, each 10K. So you would have a total of 16 investments. That is probably about the minimum to have a high chance of a reasonable chance to have a unicorn in your portfolio. I wouldn't go below that. So I made around 15, and that probably is about the lower limit. Right.
Okay. Thank you, Jan, for sharing your experience and the insights. I hope that some of the business angels have some learnings from that and can consider that for their investment strategy. Now, with that foundation, I'd like to show you how we are approaching this at MEDKAP. First of all, our main mission is to make health tech investments or health tech innovation successful. So for that, we have created this ecosystem where usually we start with MEDKAP, where we see a lot of early stage startups that come to us who are seeking smart money from business angels, from experts in the healthcare space. What we have noticed also through this is most of the founders, especially that we see from universities, so spin-offs from ETH or EPFL, of course, they are engineers or scientists. They don't have the expertise when it comes to the go-to-market strategy, and they are often lacking commercial co-founders because they also don't have the network there. It's a challenge for them to find like a full-time commercial co-founder that also has expertise in this space. So together with some members from MEDKAP, we are helping them with this with our CCO as a service offering. On the other hand, we also believe that corporates play a super important role to make health tech innovation and the startups successful, because it becomes more and more difficult for startups and for new health tech companies to create their own distribution channels and to build this up. So corporate partnerships on a commercial focus are very important and increase the success chances really by a lot. And however, corporates at the moment, as we see it, take this relatively opportunistically. They maybe look at some accelerator programs and see if there's a startup that is interesting for them. But what is more important is that they have an internal view and figure out what is needed for their strategy to keep the competitive advantage or to build more market shares, and then really to think about what are the requirements and what are the startups that are the right match. So hence, we're also helping the corporates on that side to build this up, and hence foster collaborations between startups and corporates. So coming more into MEDKAP, we have a few operating principles. As we have already mentioned a few times, we focus on health tech only, which for us includes medtech, diagnostics, digital health, lab tech, or tech bio. What we don't do is pharma and biotech, because usually there the ticket sizes are much larger, which means we would expect a lot more dilution, which is something we don't really like. And often it's a very binary thing, whether the clinical studies work out or don't work. We can't really influence that. We can't really support them on the commercial strategy. And hence we focus on, health tech. The majority of our members have a background of 20, 30 years in the healthcare space, and this is really something that all the members benefit from, because as you know, health tech is a very broad field. If you've been in the diagnostic space, or I've been in the neurosurgery space, I don't know much about diagnostics, so hence we really benefit from our expertise and share that, and have set up the processes in a way that everyone can benefit from these insights, which is of course a huge benefit compared to being a business angel just by yourself, where you would have a very limited scope then. We do focus on Switzerland, as we have mentioned. It's a very strong ecosystem here, but we also have a European international network with other business angel clubs, and also exchange deal flow. If there has been an investor, for example, in a French startup, in France we work with Angel Santé, they recommend a case to us, then we also consider those, and hence also actually made an investment into a French startup. I think what makes us unique as well is that we are always creating a syndicate which actually enables these small ticket investments, as Jan has proposed. So making a few larger investments to actively work with the startups, but then also making a larger number of small ticket investments, which is usually not really possible, especially if you're a business angel by yourself, because startups, even in a pre-seed phase, their minimum ticket is usually 25,000. Some have a minimum ticket of 50,000 because they also don't want to blow up the cap table. And hence syndication is a very great tool, both for investors, but also for the founders. As you can see, also we are providing a platform for thought leadership and advisory at MEDKAP. I think those are the most important things here, and we really focus on also the market access and accelerating the go-to-market strategy. All right, if you don't have that yet, we have put together an investor playbook, which basically is a great summary of different articles from our members focusing on medtech, diagnostics, the different verticals. Also an article from Jan on the investment strategy as he has presented it now, and what we're proposing. It also includes the funding report. So it's really a lot of insights that are relevant for business angels, especially if you're just getting started. So how do we work? Startups submit applications. Now I think we are close to 200 applications. We had 66 startups that have pitched. So in the latest round, we had 19 applications, then picked 4 startups that are pitching at the event, which is next Tuesday at 5 p.m., which is going to be an online event. And we have invested in 6 startups in 7 rounds. We have made 2 follow-on investments. We are at the moment around about 43, maybe 44 members now, and also have a very active advisory board that helps us in selecting the deals, but also in growing in the Romandie, for example. or with finance and with PR. Here's written down our main process. As I mentioned, there's a startup application, the jury review, the pitch event. What comes afterwards is that we are collecting the feedback from every member where they would like to invest potentially. This is then the input for our investment committee, where we review this and discuss the cases that received the most interest, but also that match our investment criteria as business angels, which are basically that we don't expect much dilution, that we can support them with commercialization, that there is a clear exit path, as Jan has mentioned. This is something most founders, especially in the early stage, don't really consider, but it's hugely important. And those are things we consider and then see if the startups also check those boxes. We assign a domain expert, so one of our members who has been in that vertical, who has a big network or knows the technology very well, to help us mainly with the technology and the market assessment. And I'm helping as a deal captain with the governance and financial things, and also then set up the deal on the syndication platform, where I invite all the members, where they can place a soft commitment at first, and then later on make a hard commitment. So in the investment feedback phase, or the investor interest as we call it, and the soft commitment phase, the members can still pull back if there's something that they have now identified as a red flag or something that came up. Then they can still pull back. But initially we want to collect all the interest from everyone who might consider an investment. Yeah, and then everything happens online through the syndication platform. We are using leva.pe with the contract templates that you can sign online. You do a KYC process once, which is also very helpful, because otherwise we would have to do it manually, but also the startups would actually have to do that manually. Most startups actually don't do that. So there we really wanted to make sure that we are on the safe side, legally and in regards to regulations. So what does this look like when we're rating startups? We basically look at 6 main criteria that have also basically come from a study that looked at what are mainly the success predictors and the growth factors for startups. There are over 60 individual parameters that can be put together into these 6 groups. Obviously, as you can imagine, the team is very important. So do the founders have experience in this industry? Do they ideally have commercial expertise? So is it also a diverse team? Traction and strategy, of course, is important. Are they already in touch with potential customers? Have they validated the technology and the business model? Do they have a support network, which also includes memberships at accelerators, for example? Competitive advantage includes things like IP, but also maybe unfair advantages that they have due to market access or partnerships, maybe with corporate partners, for example. Is the market attractive, large enough and growing? And then funding. So is that a project that is fundable? How much money does it need in the future potentially? And are the founders capable of raising so much money? So if there's a university spin-off and basically PhD students who've never worked actually in their lives, I mean, if they are starting a pharma company or a diagnostic company that needs 500 million, then it's very challenging for them, of course, to raise so much money. So they would have to consider who to bring on board to manage this. Those are some of the startups that we have invested in. Health Yourself was the first case where we invested, who is developing very positively. Actually, all of these cases are developing very positively. And I believe this is also due to the very structured process that we have. My impression is that the startups that make it through the 3rd round and actually then also receive funding, there was certainly some very much scrutiny on those cases from experts in the space, where I believe no family office or VC manager actually can do that due to the complexity and diversity we have in healthcare. So I believe there, we made very good investment decisions so far. This is the team. You already got to know Jan and myself. We founded MEDKAP together with Max, our legal counsel. The current president is Frank Desiree, who was elected in February. Then we have an advisory board with 4 members. Marcus is very active as our jury chair. Sebastian, finance, James helping us in the Romandie, Daniel Heller, the president of the KSB, as PR chair. And you can see here also that we have a very active jury with diverse backgrounds so that we can have a look at each case. We're always trying to have 3 people to review one startup case to get these inputs. So how do we integrate our members? There are very different possibilities, but of course members are providing referrals to either new members, also to startups that are applying. The advisory board is also helping us with market insights and of course with organizing the jury, and then selecting the startups at the end, providing feedback, being active as domain expert. If you especially want to make an active investment, this makes sense to dive deeper into a certain case and then just share your expertise with the other members so that you have some co-investors basically on this case. And of course, then after the funding round, as Jan has already given some outlook, it can continue, especially for the active investors, to take on advisory mandates or board mandates, or potentially we also work with the startups through Capsly, even though there is no direct connection. So at Capsly, we work independently with startups, whether they have received funding from MEDKAP or not. And also, we don't just invest in startups that have worked with Capsly, just to mention that here as well. So these are 2 separate legal entities as well. All right, we organize pitch events every 6 weeks. So 2 events per quarter, either online or offline, so physical events in person. The next online event is going to be next Tuesday. I'm going to share the link with you if you want. I can put it in the chat here as well. And the next physical event is then actually 1st of October in Schlieren at Zülke Engineering. So how you can become involved is, I think for you, the next step would be to join one of the pitch events to see how that is, who are our members, to get to know the startups, the members, etc., and see if that's a good fit for you, if that's something that matches your interest. And then you can become a member and start actively investing. And if you want to help us build MEDKAP and support our mission to bring all health tech investors under one roof, you can also join our advisory board and help us in different areas of activity. Okay, here are the conditions. A membership fee is 990. If you get a referral from a current member, you can get a 50% discount.